Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York on Monday, 14th day of March, 2016, and this is the Daily Report for Gold and Silver. And what a day to report on this market as we see a cascading waterfall move down in the precious metals markets, with gold trading off about 1.25% on the day, currently trading at 1234, 1235 in that area. Now it is traded to a high of 1261.10 and a low of 1229 and change. We are, of course, flat. We pulled profits last week at 54. The real question is where can we expect this fall to alleviate itself or conclude, and at what point will it be safe to get in the water from the long side? That's the question we will attempt to tackle on today's Daily Report. So traders, obviously the question with today's dramatic fall, whether you want to say we're down $14 to $15 or when we look at COMEX down $24 on the day, the key to today's move is it is a continuation of the sell-off that we saw on Friday. We're looking at a daily chart broken up as a 440-minute chart so that we get accurate prints. And on this chart, I have basically one fib retracement that we're going to work with. And that fib retracement is going to look from this double bottom, which sits at around 1045, up to this record top that we have at 87. And as you can see, the record high that we got was actually on Friday. You can see that right in here. Now, in terms of a straight candlestick pattern, you almost have what is called an engulfing bullish. The reason you wouldn't have it a straight engulfing bullish is you can see the open on Friday is below the close on Thursday's candle. But it's very, very close, and I would certainly label this and identify this as an engulfing bullish. I would also identify today's candlestick pattern as a potential confirmation of that two-day pattern. Your confirming candle would be right here. Now, here is the key. When we break this market down into critical areas, we of course want to look at our 23% retracement and our 38% retracement as the first potential points in which we could see this market find some support and move back up. Now, it's quite clear that we had a dramatic low that came just to the 23% retracement. You can see that right here. We have not closed below it, but we are just above it. But nonetheless, you've got this kind of pressure in the market. The question is, A, will these particular lows, and I believe the lows that came in were around 29, will they be able to hold? Because traders, if they cannot, the next logical spot to really look at is that 38% retracement level. And that comes in roughly at about $1,200. $11.95 to be exact on this particular chart. Now, if you match up this particular area, meaning the 38% retracement level, it also matches up with this top that came in back in October of last year. You can see that right here. So that would be a logical place to look for some support if, in fact, the market cannot hold this particular level of current support, very, very minor support at that. I actually wouldn't even call it support unless we had a bounce off of it. But this would be the first level that we want to look at. And as I said, the second level that we would want to look at is this 38% retracement level. Now, in other markets that we look at, we did have oil really falling out of bed today. Let's go ahead and pull up a chart. And this is that chart that I spoke of. We've got oil down about 3% on the day, $1.21 lower per barrel at $37.29. That's the current print. This, of course, being a weekly chart right in here. And if you recall from last week, I definitively said that we will probably have a cap right at around 40. That's what this dotted line represents, or dashed line represents. And at least for now, we certainly can say that we've got some sort of ceiling in the market. And I believe personally that we will see some downside activity in oil. I think we'll see it come under pressure. And that beckons to say what we think is going to happen in the equities markets, because as we pointed out on Friday, as well as a couple of days last week and all through this last month, and that is that there's a absolutely high correlation between moves in U.S. equities and moves in the crude oil market. And so traders, lastly, do want to take a look at the U.S. dollar, up almost 0.5%, 0.43 on the day. We're looking at a daily chart. You can see this dynamic move, but considering the kind of move we saw on Thursday of last week, in which the dollar literally fell out of bed right in here, this kind of move back up to me is important because, as you know, we've got a 61% retracement that comes in roughly at 96.35, and we did close well above that. Now, in terms of the marketplace itself, in terms of the price of gold, you did have a $16 move to the downside today, of which $11.50, according to the Kitco Gold Index, was due to normal trading or selling in the market, and about $4.50 in terms of a negative effect is due to a strengthening dollar. For right now, we are going to absolutely stand on the sidelines. As I said last week, we want to see the dust settle and see where this market is going to find support. I still believe that we are in an upward rally. However, I believe right now we are currently in a corrective phase of that rally. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.